Good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for the evening of Thursday, and we're at the 18th of September. It's dark in Chicago already. It's just after 7 o'clock, and it's dark. I mean, right now, the lights have to be on outside. It's interesting how fast it's getting dark, and we'll be in the fall before you know what's going on. We're still in the 80s here, but it's nice. The stock market, sunny as can be. All I see are clear skies in the stock market, no clouds out there, and it's like you can look up in the blue and go forever. Well, that seems to be what it is. And even the futures tonight, they're higher again. Now, you're not quite getting that type of play in the metals. They've been wobbling right here, coming down a little bit, everything from the gold and the miners. Now, GDX was up, but COPX was down. You were down a bit in this SIL. You're backing off a little bit, which is interesting. Because you would think that the cutting of rates, that's going to help the metals, if anything. First of all, demand for the industrial metals. Second, what's the Fed looking at? They've already told you they're not looking at inflation. They know it's going to come. You're not getting any major reports tomorrow. Monday, you have 5 Fed speakers hitting the road. So we'll hear what they're thinking. This will be the first time we really get a clear shot at hearing what the different speakers are doing, and we got a lot of them, so that's what you pay attention to. But it's all systems go because the market's looking at it this way. The one thing that we cannot afford at this point in our economy is to get a weak labor market with high inflation. So the Fed would rather, whatever they take, keep that labor market tight. In other words, give enough money, loosen the purse strings, businesses can move forward. That is what I'm reading, and that's how I think it's going to play itself out in the meantime. The opposite should be happening in the metals in my head. If the stock market's rallying on that, why aren't the metals? But they're not. You can see XLC did move today, not an awful lot. Tesla backed off $9. I can't give you reasons for that. I can tell you you're still getting your $20 moves every day, if not bigger, in the ranges of the market in Netflix. Amazon pulling back, Apple pulling back a little. And Home Depot, which got hit the other day, yesterday, has come back up a little along with Restoration Hardware. So it's an interesting time in the market, but what do you do with it? Well, that's where it gets fun. When we look at Rocket Mortgage, you're in a consolidation pattern. Now, the question is, does it want to break out over that high or this low to finish out? You had a gap in the chart here, and I thought you would fill it, and I think I mentioned that when I started covering this, which brings me right to this point. What do you want me to cover tomorrow? Yeah, it's time. It's already going to be Friday. I'll drop Rocket, want to cover something else for you. So write me what you want me to cover. I'll choose from it. If it makes sense, away we'll go with it. All right? I've had a couple of people write me from last week, and let's see if we get something a little more interesting. The reason I liked Rocket and picked it was I heard from people, and they go, well, homes, people be more interested if mortgages fall, which has happened. Affordability, don't know if home prices will fall, all right? A lot of things you got to worry out in there. And that's what you've got going on in this market right now. I see a higher high and a lower low. Okay, that's not a trend at this point. I still see the consolidation. I certainly have upside bias as the market's over the 18-day average of closes. Now, if the market decides to break, that would be my downside target for support. But if it breaks out to the upside, you go through that, you're in clear sailing. Why can't you just be moving up and away? The resistance is 2248. Well, that tells me that you're not going to just pick up and run away. Just the way you tried it here, you get thrown back into that Bollinger Band. And last but not least, you're still overbought. So is it a 10-star anything? No. It's worth watching, but it's not there in my opinion. Oklo is still bullish as can be. I don't see this stopping here. It's got the embedded reading, but it's over the Bollinger Band. You only stay over that band 5% of the time. The market runs the band often to get you to embed in the slow stochastic. And from there, the first reasonable break, whatever you decide is reasonable, to me, the minimum reasonability would be it's got to get back under the Bollinger Band in a certain way. I teach that in my enhanced Bollinger Band course, and it happens often. I'll wait for that development there. Netflix is still on a downtrend. You have lower highs, lower lows. It's finding its support at the Bollinger Band, but it can't seem to get up yet and stay over the 18-day average of closes. Now, if it can clear yesterday's high of 1233 and close over that, then I think you'll change the pattern. You'd have higher lows, higher highs, and you'd open the door up for the 1264 level potential. I don't know if it'll go there, but that's the potential on the chart. As I told you when you lost the bullish reading in UNH, which is United Healthcare, here is the embedded reading, and I use momentum so often. If it loses the reading with the red line under 79, right there now, before it goes for this high, I believe price and the 18-day average, since that's the closest main moving average, will make a run at each other. You don't think that's what's going on? So, no surprise. Am I bearish? Not at all. So I'm waiting to see how the market handles that, assuming it gets down there, and that would be the interesting thing. You had an outside day down today. If today's high is taken out, it'd be a big signal that you don't, that the market is really trying to carve out a bottom. That's going to be the important thing to me. In Home Depot, you also lost your bullish embedded reading. So I'm still looking to see, can the market get to the 18-day average? Why not? That's logical. Robinhood doesn't give up. Everything is bullish for Robinhood. And I'm not saying that facetiously. When cryptos go up, which they back to the 118 level in Bitcoin, it gets a bid. It's got great business model. It's got young traders, and they're traders. They're not investors, a lot of these people. They plow ahead. It's doing quite well. I mean, run a chart of that in Schwab and International Interactive Brokers, and you see what I'm getting at. Tesla. People just believe in this man. It's that simple. And that's, if you're buying Tesla, forget the car part. It's all about what's on the come. Because you can't possibly tell me that this market's there because of the cars, all right? All you read about is they're not doing well. Now he's replacing door handles. The sales are down here, they're down there. The competition that he has worldwide doesn't matter to me. The cars are what got him going. He's still got the battery power. I understand they're new megawatt batteries, not for cars, for where you're going to put in your garage for your house. They have figured out a way to do it much cheaper, and it's super powerful. I was reading a story about it today. So there's a lot going on with this company, and his attention is back to the company. You don't see him on the news anymore with politics. Since he got away from Trump, the stock has made its move. I think you'd agree with that. Joby, I think you're carving your base out for a move to the upside now. Now, do you buy a base? Well, if you're going to nibble at it, the traders probably don't want to see it back under the 1353 level. The key is, can you get over the 1493 level and lift the market out of here? If you do, understand you'll be over the Bollinger Band most likely. You got to get this to embed, but the setup is here if it wants to try that. If it takes out, in my opinion, 1353, the odds are it could go back to the lower Bollinger Band. You're at a real interesting point in the market now. In the financial services, well, you cut interest rates. What do you think they're going to do? They're going to do business now. Right back up to the Bollinger Band. It's not in a trend trade. You have a lower low, higher high. You corrected. Remember what we talked about here. As it was doing it, I said, what you've done is gone back to the 18-day average to try to figure out what is next. And it's trying to come up here. Is it a clean trade? It is not. There are better trades out there, I think, than that. Now, the industrial sector, for the first time, yesterday was so important, and today's followed through really there. Outside day down, agreed? And now the market takes that high out. Before it takes out this low, my work says the odds are very strong. You're going to make a run for the upper Bollinger Band. The key is, can you come out of this action? If you do, I think you can take from that high to that low. I think you're going to be up in the 158, 160 level if you can get out of this and stay out of that at this point in time. Prove to me you can do it. Energy still bullish. Again, nobody's able to stop Europe. I want to use that word, Europe. They got to stop buying Russian natural gas and a couple of the countries there, their oil. The president, our president, is so right. Why should I get involved until you guys settle what you have to? I don't want, and him, I'm talking like the president, I don't want to be involved anymore. You guys get your house in order. How can you want us to do things as Americans when you keep buying his oil and giving his war machine more money? It's not like you can't get natural gas from the good old Uncle Sam, guys. We're there. GLD, higher lows, higher highs, still embedded. So yeah, you're getting a correction. So what? As long as the red line doesn't close under 79, as this market's falling, the pros are probably nibbling on the long side. Lose that, they might walk away for a little bit, but the fundamentals are there for further gains in the gold market, in my opinion at least. Silver market, acting good, but you lost the embedded reading. The only time I can get bullish is tomorrow if you regain that. If you don't, the odds are strong that you're going to get back to where price and the 18-day average, which will be higher tomorrow, will probably try to make a come together here. Copper market, you also lost the bullish embedded reading here. So correction in the miners is underway right now. BND. Who would think BND and TLT would be down like they are? They've stepped out of their uptrends. Whoa. All right, and isn't this the event? But do you ever hear buy the rumor, sell the fact? The fact was yesterday, right? Wednesday. Fed came out, you made the higher high, and people just said, well, how much higher can we go? We've got the situation now, and I understand that. In the dollar index, it was the same thing. You heard me say, I don't think that you're going to stay under the Bollinger Band on this move, but I don't see much upside. I see the market running into resistance now, 27.39 to 40, the combination of the 100-day average and the 18. The market has now worked itself, and it's not quite. It's working itself. When it reopens, it should have worked itself. That'll be past tense, where neither of these numbers are under 30, and it'll get interesting to see what the professional trader does with that. You've got to get these two numbers now together under 70. Not there yet. And then I think the buying condition sets up in the euro. So I am still looking at the potential of the euro long, the dollar short, but you're not quite there yet. And you put it together and you try to come up with game plans. And that's the fun. And it is fun trading. And I have a ball in the morning when I put out those morning videos for you. And we talk about it. We talk the setups and I lay the trades out and away you go. I am, by nature, the trader. I'm not a day trader, so don't think that's what I mean by trading. It's a trade is good until it's bad. Got it? I was watching today the roundups on CNBC. I was watching also a number of traders, and I love what they do. Some of these guys like Josh, they're so honest. They go, they don't all work. You put them on, you take them off, and you get to the ones that do work, and you try to ride them. He's a trader. He gets it, all right? Other people will buy them, and they'll ride them forever. It'll come back. It's got great fundamentals. Just wait. Well, that's a road for a lot of people, unless you get a bull market like you've had for the past couple of years, which don't always happen. That could be a road to a lot of sleepless nights. I didn't say ruin, because that's not what it is. In the end, the stock market goes up year after year. Not every year in a row, but year after year. Take a 10-year period. Just throw it at a dart. I didn't say you have to start on an even number. Take a look how the markets do. All right, but you're trying to capitalize on that and make your money. And the way to make it is be invested. All right, be a trader. Whatever it might be, you got to be in the market at some point. And the fun of what I try to do with you is find those moves that can make 10%, 5%, 30%. NVDA, 500%. I mean, I can go on and on as to what they are. So if you're interested, just go to our website, iraepstein.com, research. You can also move your cursor up here to get to those areas. I'm Ira. You have yourself a great evening. Watch the other videos, and I'll catch up with you tomorrow. And remember, send me what you want me to cover for the weekend. I'm Ira. Take care.